India research at Credit Suisse from the sidelines of their 19th annual Asia Investment Conference in Hong Kong, and he began by asking him what he made of the credit policy and of course other market information as well. Take a look.
25 basis points was a given.
Yeah.
So in the market, the run-up that we were seeing in the past week or so perhaps was building in the expectation that it could be 50 basis points.
Sure.
Which at least I thought was unlikely. I mean, if the governor had to do it, he would have done it mid-cycle and not waited for the meeting to happen. So that's part of it, but I think it's also because there seems to be some global risk-off. I mean, so those fears are somehow coming back again. So I think in line, so that's why the market move seems exaggerated.
Sure.
But I don't think it's all to do with the 25 or 50.
Okay. What's the big worry for a lot of the investors whom you met at the conference, especially towards India? Because you said the growth is pretty much there, but they are not very confident. So what would make them confident that the growth is really there in India?
No, I think, see, whether we like it or not, I think if you're a global investor or an EM investor, you want headline numbers to start to look
Sure.
good. Now, you and I may think that the GDP numbers have big flaws and that unless you get to the third estimate of the GDP, which is 2 years later, you will not find an accurate measure of what's actually happened. But for the global investors, I think just those numbers matter. So unless you see headline IIP or headline GDP growth starting to do very well, you will not see comfort coming back.
Sure.
There's also a lack of headline-grabbing reforms. I mean, I think personally that things like Uday or Jan Dhan Yojana are actually very, very important in terms of getting growth back. Or even the fact that railways and central highways or the national highway road capex, I think, are doing very well. I think they're very important for growth, and we are seeing that.
The near-term number, the data which investors will be watching out for is the Q4 earnings.
Right.
What's the broad sense? Will it be disappointing? And do you think this is a quarter which will have a trough out, and you'll see better earnings in the next 2 quarters from now?
So I think so the last 2 quarters we have been seeing what I call a big divergence.
Okay.
So if you see the BSE 100 earnings, so we do our results summary in BSE 100. So 38% of the companies reported an EBIT decline, which is the same ratio as in December 14. So that hasn't changed. But 26% of the companies reported 30% plus EBIT growth. And that number is substantially higher than what it was. So if you are looking for headline EPS, I don't think you will see an improvement in the March quarter. Because the banks, which are a very large part of the profit pool of the Sensex and the Nifty and BSE 100, they are not going to see a big improvement. Headline numbers will be. But if you're talking about cement companies, auto companies, consumer companies, I think you'll see a substantial improvement.
What on the bankings? Because that's a big weightage, and you've seen a bit of a negative reaction to the RBI policy today. Generally, what's the view on the banking stocks in India?
See, I think we've been underweight on banks for financials actually for quite a while now. And, I would stay that way.
But you've been liking NBFCs, right?
Yes, we like NBFCs, we like some retail-focused banks. But see, the risk is, of course, I mean, I take it that now everyone and their aunt is aware that there is a NPA problem in India.
I think you were the first to flag off that.
Yes, I think a bit early, but finally the market's fully aware. So the natural assumption people make is that this is priced in. I don't think so. I think that this is going to be, because see, while everyone who's involved, the Prime Minister's office, the Ministry of Finance, the RBI, they're all aware and very seriously trying to solve it in a very, very honest manner. Problem is, there is no solution. Right? So it will be a case-by-case solution. It will be effectively something like death by 1,000 cuts. So every quarter you will see some negative surprise. And these are very tough problems to resolve. Right? So one is to recognize. Second is to recapitalize, which is what the government is going to do once we have seen the consolidation. The third is resolve. Now the resolution is actually much harder. Right? So we have seen some metal companies that have actually gone into SDR and been pulled back. So it is not easy, and therefore over the next 3-4 quarters, you will see the regulators and the banks and the corporates sort of adjusting to this new reality. So all the asset sales that we have seen is a sign that the corporates are also realizing that the government is serious. That there is not going to be an easy way out for them. They need to take the hard decisions. But where the assets are clearly broken, I think we have not reached that breaking point yet.
Okay, so not still confident on banks, but that we will get more from the Credit Suisse 19th conference.